Number 7 of the 7 most common philosophies for investing is what I call the day trading method. Now, this is not a method, really. This is like a funny way to describe what I think most people do accidentally when they get into investing. Technically, day trading is like a job almost, and most of us have heard the term day trading. And it really, if you want the technical definition, is someone who makes their income, their living, trading securities and doing the trading within a day. So they get into a stock and they get out all on the same day, hoping to make their day's worth of money, or obviously hoping to make even more than a day's worth of pay. And they're not really trading on fundamentals or whatever. They're trading on news. They're trading on whatever might move the stock, in their opinion, up 2% today. They go all in on it, and they try to make 2%, and they get out, and then they do it again the next day. There are people that do this for a living. I think if you read the statistics, most people who try to do this for a living fail. You have to be really knowledgeable and know what you're doing. But I think what ends up happening is people get into stocks and they start tinkering around. And while they don't day trade, they like week trade or month trade. And they like buy a bunch of stocks based on what their friends told them, or they get newsletters or whatever, and they're doing it themselves, and they can't withstand the gut-wrenching pain of seeing their money disappear on the screen, and they buy something and they sell it at a loss. Or they buy something and it's going up and they get really pumped, and they're like, I should sell it now before it goes down, and then it goes up a bunch more, And they're just kind of like willy-nilly, in a sense, trading stocks as their investment philosophy. So it's a accidental philosophy. It's what I think a lot of people do while they're getting educated. I point it out because it's just something that I think it's not something you would go do on your own accord, but it's something that you should acknowledge if you happen to be doing it unwittingly. I know that's been the case for me. Gosh, I still do it sometimes. I have a little bit of money where I allow myself to do stupid things just to get that nagging feeling that I'm missing out off my shoulder. It generally doesn't go that great. Ultimately, probably for most people, having someone else manage their money is probably the best thing, because a lot of us are busy and we don't have the time to put in to learn all this stuff. But even more so than that, stomaching the ups and downs and not having someone between you and selling the stocks to talk you out of doing something dumb, not having that stopgap there, can be bad. That's in some ways why I was like real estate, because I couldn't go sell it very quickly. And if it was rented and it was cash flowing and it was paying for itself, or close to, if it went down for a while, the value of the real estate, it didn't bother me so much, and I wasn't going to go sell it and go through all that. So it allowed me to not do stupid things, having it be difficult to get in and out of.